Great. Good evening, everyone. Thanks for showing up tonight. I am Debbie Schwartz, founder of Road to College and the Paying for College 101 Facebook group. So tonight is both a first and a last. It's the first time that we're doing a session with this great group of people from Citizens. As you can see, we have a lot of experts here with several years of experience working in student loans and financial services. But it's also our last official, what we call AMA or AUA, Ask Us Anything event of the summer. So we want to give people as much opportunity to ask questions. We have the people, great people at Citizens have slides. We can, educate people on things that are going on, but we want to really make sure that we can answer as many questions as possible. So to get started, if you can put in the chat, I personally like to know where people are Zooming from, and also it would be helpful to know what year your student is. We have a range of people who are showing up tonight. We have people actually who might have a student still in high school and they want to learn about loans, which is great. You might have a student who's about to start college and you still are figuring out, what you need to do, which is fine. And then I also know that we have some parents here with students who are in college and maybe students that are thinking of going to graduate school. So we're going to cover the whole range, whatever your question is. It would just be helpful to know where you are in the process. And also, you can feel free to ask questions or put your questions in the chat. A little bit of housekeeping. These sessions, I always run these sessions as actually Zoom meetings. They are not webinars. So as you can see, we have our video on. If you want to put your video on, it's always nice to see people's faces. And because this is a meeting, and for these types of sessions, you can put your question in chat. You can also feel free to, you can actually raise your hand through Zoom, and I will unmute you, and you can also ask your question that way. Sometimes it just might be easier to express yourself verbally than having to write all the details in a question in the chat. So with that, we can get started. If anybody has a question, or Anne and Jeff, if you want to maybe do a quick intro of who you have here from Citizens, and then we can kind of take it from there.
Thanks, Debbie, so much. And thank you all for attending our Zoom meeting this evening. As Debbie mentioned, this is an Ask Us Anything session. So we are here to answer all of your questions about student loans, refinancing, the One Big Beautiful Bill Act, repayment plans, whatever you have on your mind, just stick your question in chat and we're happy to get started.
So there is a question if you want to get started straight with questions, or if you guys want to do a few slides. But the question that, okay, somebody is asking about how the new laws might impact graduate schools.
I can take that one. So the One Big Beautiful Bill was passed in July, on July 4th, and it does have some implications for graduate students. And I can talk a little bit about that. So if you go to page 15, Jeff, probably the biggest sweeping change is that Grad Plus loans will be eliminated on July 1st of 2026. Today, the current state is that you can borrow as a graduate student up to the cost of attendance minus other financial aid received. And starting July 1, 2026, there will be no more access to Grad Plus loans unless you currently have borrowed one. So if you currently have a Grad Plus loan between, from last year or up to July 1 of 2026, you'll be able to borrow another one for up to 3 academic years. There will also be a new aggregate limit on the federal direct unsubsidized loan. Today it is $138,500 for an aggregate limit, and effective July 1 of 2026, it will move down to a $100,000 aggregate limit. Yeah, so for professional students, the Grad Plus loan will not be available for you unless you currently have a direct loan or plan to borrow one for this year. And then effective July 1, 2026, the aggregate limit for professional students is $200,000, whereas today it's only 138,500. So that does move up a little bit. Any other questions
So
on?
just to clarify with for people, so if you have a student who maybe your student is in college right now and is soon to graduate and is considering graduate programs or law or medical school or dental, something along those lines. The line here that says that the Grad Plus loans have been eliminated. So what are students' options?
So they can definitely take the unsub. And then after that, they might want to look at a private loan, where, private lenders can come in and fill the gap. Citizens, of course, is one of those lenders. We do have private loans for graduate students. Students pursuing an MBA, a law school degree, healthcare professionals, and they are credit-based loans. So you have to, apply online with us or call us or go into a branch. You can sit down and work with a banker to apply, and we can do a very quick soft pull, and you can get your interest rate right away and see what you've been approved for.
And what would this also mean if I'm a parent of a student who wants to go onto graduate school? Do you think it's likely that the student would be able to take out a loan for graduate school even through a private lender on their own, or as a parent, are parents still gonna have to co-sign?
So we don't require our graduate loans to be co-signed, but it does, of course, help with approvals if they do co-sign on the loan. And it usually is a parent or a sponsor. It doesn't have to be a parent, it can actually be a sponsor.
Okay, that's good for people to know. This also, it's not a direct question, but I see people here who have students in college, existing college students. Could you explain maybe like some of the changes that you started touching on? If I'm a parent with a student in college, like what do I need to be concerned about, or is there anything that's going to impact me?
Yeah, so for parents, if you've borrowed a plus loan to help pay the tuition bills, there will be changes effective July 1 of 2026. Those who've borrowed in the past are grandfathered in, but the new annual limit for parent plus loans will be $20,000 per dependent student, and the aggregate limit will be $65,000 per student. So that changes things a little bit, because today for Parent Plus loans, you can borrow up to the cost of attendance minus other financial aid. So you may see that you have a little bit of a gap.
Okay, we are getting a request, which I think is fair, that maybe we just go through the slides and people will have questions as we go through them. Are you guys okay doing that? Okay. And just so that people know, again, because there's kind of like a range, some information may be repetitive for people, or you may not need to know it, and other people it might be completely new information.
Sure, and I'll start, Debbie. Hi, everyone. This is Jeff. Happy to be speaking with you all tonight. So, on the how to pay for college. So this is really getting back to some of those folks that are just starting out. So like me personally, I sent my first child to college last year, and I have two. My daughter's going to Ithaca College currently in her sophomore year, and I have a senior son and a ninth grader after him. So there's going to be definitely some it's three, many years of going through this process myself. So really the question is, and we started out having this conversation with my kids, is how to pay for college, and what responsibility lies with both the student, myself as the parent, and both of us. When it comes down to the student, they work, they save some money to put towards their education. My kids are, they're out there applying for scholarships. My daughter did very well in scholarships last year. She was able to get a lot of local ones, which helped offset some of the cost. The school was very generous with some grants as well. And she did get some work study, which allowed her to work a job on campus. So that money that she earned technically can be put towards tuition, and then borrowing from the federal direct loan program through the federal government. As me as a parent, so for my three kids, I was thankfully able to start a small 529 plan. For those that don't know what that is, it's a college savings plan. You can start it really at any point for your children. It's an asset considered in a parent name, not the student's name. So it's much less implications. It really encourages families to save for college. The money grows tax-free, and the tax-free withdrawals as well, as long as it's used to pay for education. And then tuition payment plans is something else. It's basically financing an education is how I like to look at it, where you can really break it out into different segments. We had obviously scholarship money that my daughter did. We borrowed some money, and then I was able to take some of my current income and do it in the form of a payment plan, which I was able to make some payments. So not all savings, not all borrowing, but a mix of that. I was able to take an old car payment that I had, and when my car payment ended, I was able to take that money and put it towards paying for college. And then for the parent options, really for paying for college, there is that Direct Plus loan that Ann mentioned earlier, that will have caps on it starting next year. That's the loan to the federal government, my name only, has the student has no bearing on it. And then there's a private parent loan. And then the combo that you really can go with on how to pay for it is the most popular option is a student loan, a private student loan with the student as the primary borrower and a parent and or relative sponsor to be a co-signer on that loan. And those really are the most popular student loan choices because the student ends up with some skin in the game. It's a great way to build credit for the student if they don't have any by making different payments. There's myriad of options with different lenders. Most have immediate repayment where you're paying both principal and interest. Interest only tends to be the most popular, where you're just paying down the interest while you're in school. And then some, if you can't make any payments while you're in school, they do deferred options where it allows you to not make any payments while you're in school, which mirrors the federal program, where you don't have to make payments and then until 6 months after you graduate as well. So these are just some of the different options on how to pay for college that families have. Again, I always like to say it's not one way to do it. It's a myriad of options.
Hey, Jeff, Preston here. We have a good question in the chat if you could elaborate on some. The question is, with both Parent Plus loans through the government as well as private loans for undergrad, both of those would be solely in the name of the parent/sponsor, correct? Question mark. And maybe we can elaborate on the co-signer release a little bit as well.
Yeah, not necessarily. So the Parent Plus loan through the government, yes, is solely in the parent name. So, a lot of families make handshake agreements. Well, I'll take out the loan and my kid's going to help me pay it back. Well, they certainly can and hopefully will, but they don't have to. The loan is not in their name. They are the beneficiary of the loan, but the parent is the sole borrower of that loan. When it comes to the private market, lenders offer different things. So at Citizens, we offer a private parent loan, which basically mirrors the Plus loan, except we don't have a 4% origination fee like the federal loan does. We have no origination fees off the top. But parents can take that out solely in their name. And again, the kid has no obligation to that loan. So we do that as kind of to mirror the Plus loan. But as I mentioned before, the most popular option is basically where the student is the primary borrower and a parent or some type of sponsor is the co-signer on that loan. The good news about that, again, with that, building interest for credit for the student making payments, as Preston mentioned, co-signer release is a big option as well. So you want to look for a lender that has what's called co-signer release, which allows you as the co-signer to eventually be released from that loan. Usually it's after a set amount of payments, where as long as those payments are made in a timely factor, then that student can then be released, the co-signer can then be released from the loan if the student now has the student borrower has graduated, has making enough money and enough income and enough debt to income ratio to handle that debt on their own. And so that allows that cosigner to be released. So, definitely, at Citizens, we offer cosigner release right now at 36 months. But we'll be looking in the future to eliminate that, to have no cosigner requirement, meaning no cosigner repayment requirement for that time length. So it'll be basically, if the student is eligible and can handle the loan on their own, the cosigner can apply to be released. So that's exciting news coming in the next several months.
Good deal. Have another question
Hopefully that
for you.
answered your question. Thank you. Yes.
So we have a student that is going to have to take another year or two beyond her bachelor's in May. Is she still eligible for financial aid going into a 5th year of undergrad?
Yes. They're still eligible for financial aid, and Preston, you can jump on this as well, being a recent former financial aid director. But on the loan side, absolutely. They're still eligible for loans as long as they haven't met their aggregate limit. And for undergraduate students, that aggregate limit is $31,000. So as long as they have borrowed and haven't hit that maximum, if you take out the traditional loans are $5,500 your first year, $6,500 your second year, $7,500 your third and fourth year and beyond. That averages around $27,500. So they do build a little bit of a window in there for that fifth year seniors essentially. So yes, if they're still eligible for aid, at least on the loan side, and Preston or Crystal, if you want to chime in on any sort of federal aid, Pell Grant, SEOG, anything like that, would they still be eligible for those?
Yeah, so for the Pell Grant, it would depend if that student graduates with their bachelor's degree and then continues on with their education. If they do graduate and have that first bachelor's degree, they are no longer eligible for the Pell Grant.
Okay. So then they would be considered in a graduate program in which unless the school is providing some aid, really their only option is that unsubsidized loan that Ann mentioned earlier of $20,500, depending on the program, for traditional graduate program. But great questions. Keep them coming.
All right. Another one we have here. How would we start payments on federal loans that we took out for this semester? Will the government send us an invoice? The private loans seem to be easier in this regard.
And I'll say you're correct on that. As a private entity with the private loans, yes, we're required with Truth in Lending Act and everything to be very upfront on payments, what your monthly payment is due, so on and so forth. The federal government, not so much, because they're not beholden to the same rules that we are. But for anything with the student loans, if your son or daughter took out a student loan, you want to go to studentaid.gov. That's going to be where you find your student loan servicer. That's going to be where you set up an account with that servicer. So whether it's Nelnet, whether it's Mohila, any number one of the student loan services, Ed Financial, you should be able to go to mohila.gov, set up an account there. And then that's where you can make payments if you want. Now, you're not required to make payments while you're in school. So it depends on the type of loan that your son or daughter received. Would be if it had a subsidized portion of that federal loan, that means the government is paying the interest while you're in school. So there's no payments to be made, and the government is paying that interest. You will have a portion of that loan if you took the whole amount. If your child took the whole amount, that would be unsubsidized, which means they're responsible for that interest. One thing you can do is when you go in there, you can make payments down on the interest. I always encourage folks to do that, because that $5,500 loan that's been taken out is now going to be starting to capitalize interest. Interest is just going to start capitalizing throughout the time that they're in school. It allows you to pay down that interest. So when you take out a $5,500 loan, they then graduate with a $5,500 loan. So having the ability to pay down that interest is excellent. There's really no reason to start paying the loan back while you're in school, because it's not really in repayment. So if you can chip away the interest and maybe sock away that money or invest that money somewhere else, and then when the loan comes due, maybe when they graduate, then you can maybe pay it off in one fell swoop. But yes, that you do have the ability to pay down some of it, again, just the interest while you're in school on those federal loans.
Well, I will add to that, Jeff, on the finding out who your servicer is, depending upon when your child's if school is beginning. I know right now my daughter started this week in college, so the different time frames across the country. I used to be a financial aid director too, and I always told students to wait about 2 weeks after you see the money hit your accounts on your student statements and hit the bills, because it takes some time to get assigned a servicer. You'll be assigned one. And so when you go log into studentaid.gov today, you might not have anything showing. But if you wait a couple of weeks and go check, you'll see who your servicer is, and that's who you work with to do everything that Jeff just spoke to about, paying interest or just setting up your account so you can, track your borrowing and pay attention to what it looks like as you continue to borrow throughout the academic career.
Here's another
Thank
one
you, Crystal.
here. So there are broker type loan companies that review rates from several private lenders. I believe Citizens is included in those. Should we still apply separately to Citizens?
I would say, I mean, selfishly, yes. So yeah, there are loan aggregators like a Credible. We are on Credible as an option where folks can go in and shop around for different rates. But with things like Rate Quote that Citizens offer, there's no harm, no foul when it comes to pulling the credit. So we don't do a hard credit check when you're applying for a loan. So you can absolutely go to Citizens. Citizensbank.com/student, and then you can apply for a student loan without any hard hit to your credit to find out what your rate might be based on the repayment term and all that. So yeah, no, absolutely, you can do both, but again, there's no harm in going directly to Citizens and applying. Other lenders do a hard credit check when you apply directly on their site. With us, we don't do that. So it's by all means you can come to Citizens and find out what your rate might be.
Sorry, question, because that was my question. So just a follow up. I think my question is more, I mean, is there a chance we'd get a better rate going directly to Citizens, or likely not?
The only way, not necessarily, the rates we show on like a Credible would be the same rates we would show on Citizens. Yeah, no, it would be the same rate because we'd be using the same credit criteria. In addition, with Citizens, we do have things like a loyalty discount. So if you are a customer of Citizens, so if you have a checking account, a savings account, let's say, then you would get an additional 0.25% off your interest rate by being a customer of the bank. So there may be some benefit to doing it directly through Citizens that way by being a customer first. Hope that answered it, Sean.
Yeah, it did. Thank you.
Here's another one, Jeff. Can you please speak to grandfathering in regards to a Parent Plus loan today versus the changes that will take effect as a result of the big, beautiful bill?
I'll have Ann take that.
Okay, so they do have the grandfathering in for borrowers who currently have a plus loan today. And today, I think I mentioned earlier, the current status is for borrowing is cost of attendance minus other financial aid received. Come July 1, the annual limit will be $20,000 per student, and the aggregate limit will be $65,000 per student. Yeah.
And so just to add to that, as far as the grandfathering is concerned, so with all these changes coming in, what they're saying, what folks are saying is that if you borrow a plus loan today for July 1st of 2026, even if it's a nominal amount, that's what some folks are recommending. It allows you to borrow, keep that yourself in the plus loan program going forward because you'll be grandfathered in. Again, the plus loan itself isn't, again, I would say and so again, being absolutely biased, it's not the best loan because again, being in the parent name only, as well as having that 4% origination fee. Likely, if you have decent credit, you might do better in the private market, but the plus loan there, is definitely an option. But it is, if you want to borrow without the caps going forward, that's where, folks that may not have a plus loan today may consider doing that so they'd be able to borrow in the future. But post July 1st, 2026, the families that borrow in the plus program will be subject to those caps of $20,000 a year and the $65,000 aggregate. And if you're looking at the screen and says, if my kid goes to college for 4 years and $65,000 doesn't equal $20,000 a year, you'd be correct. So government math at its best. So we're not quite sure why they capped it at 65,000, but $20,000 for 4 years, yes, is 80,000. So the cap is less than what you would borrow if you did max out on the $20,000 on an annual basis.
And Jeff, just to maybe clarify for families, this idea of grandfathering, if people want to consider it, it's not just for parents of new college students, incoming college students. It might also be something that an existing a parent of an existing student might want to think about if they still, have 2 or 3 years left to pay for college.
Yes, exactly. So it's if you haven't never borrowed a plus loan at all up to this point, and it's something you want to consider going forward, yes, yeah, as long as you'll be subject to the old rules of no caps, essentially. The plus loan program was still going to be there. It's still going to be around. It's just there's going to be limitations on how much folks can borrow, and I think that was deliberate. I think that there's been a lot of people borrowing up to what's called cost of attendance. So if someone needs to have to borrow $50,000, you can borrow a plus loan for $50,000. And the credit check is very limited. You don't need to show income to borrow this loan. So there's been a lot of I would say over borrowing when it comes to the plus loan. So I think this was the government's way of sort of curbing some of that.
Yep. And another question in the chat here is if we want to take advantage of the grandfather clause, what is the smallest amount that can be borrowed? And that information has not, I can go ahead and take that. Information has not been provided yet. There's still, the education department is still kind of working through that to determine if there is going to be a minimum amount, and if so, what is it?
Yeah, exactly. I don't believe that we know. And I mean, I know that you can pretty much borrow as low as, I know like for different private lenders they have, so our minimum is $1,000 to borrow a citizen's loan. Other lenders may have different minimums around that. So I'm not sure what the plus minimum is. Usually people don't borrow. Obviously, they need a lot more than that to send their kid to college. All right, let's go back to, since I was jumping around again. So we talked about, I guess we really covered really what is a private loan. There are borrowed funds that must be repaid with interest. Again, I talked about the student being the primary borrower, where a parent likely would be a cosigner. Cosigner does help in a lot of ways to increase that the borrower's chance of approval, because a student likely doesn't have either the credit history or the income in which to take out the loan themselves. And then having a cosigner could potentially lower that interest rate as well. And then what to look, when we talk about why private loans, as I mentioned, that's a great credit building exercise for students. Avoiding those origination fees. I don't really know of any private lenders that have origination fees. There's no penalty for prepayment. So if you decide to pay off the loan early, not a big deal. And then does give that financial responsibility to the student. It really does go a long way in having them have some skin in the game and being involved in the college financing process. Things to look for in a private lender. There's several of private lenders out there. You've probably got mailers. You've probably shopped around if you're students in college currently looking to find a private loan. Things you want to look for are like borrower benefits. So, for instance, the Citizens, we have our multi-year approval, and I'll go into that in the next couple slides of basically borrowing once. And then allowing you to, we approve you for all the years, the 4 years plus while your child's in school. It allows you to then request funds additionally on an annual basis after that without a hard hit to the credit. So those are different types of benefits that different lenders offer. Financial stability. So looking at a lender, there's a lot of fintechs out there. Some lenders come and go. Look for a lender that has financial stability, that's been around for a long time. Obviously, we're a bank. We're very financially stable, so nothing to worry about there. Reputations is another one. If you look in the news and you see that like Senator Elizabeth Warren, our senator here in Massachusetts, just sent a letter to a bunch of private lenders. Thankfully, we were not on the list because of our reputation. But lenders you've heard of like Sallie Mae and others were sent this letter by them to making sure that they weren't going to be predatory when it came to lending to students. So those are things you want to look at around reputation. Repayment options. So different lenders offer. We have a 5, 10, and 15-year repayment. We're exploring other repayment options as well. Looking at rates, obviously rates very important. Every lender has that low rate, but look at that range. Look at where your credit profile might fit within that. Cosigner release, I mentioned that earlier. That's a big, I think it's a big deal. It's one that's overlooked. Not every lender offers cosigner release. We're very proud to offer that, where the student should be able to take on that debt on their own if they have the income to handle that. Deferment policies, so things around, if hardship deferments or going back into school, can you suspend payments that way? So, different lenders have those different policies as well. A holistic relationship. So again, that gets around to other areas. Again, we're a full service bank with a wealth area and a home equity line, all that stuff. So we have different relationships around that. And then a morbid discussion here, but one necessary one with a death and disability policy. We have one here at Citizens where if something unfortunate happens to the borrower, the child in this case, the loan gets wiped away. We're not going to be collecting on a loan like that. So those are just things, again, you want to look around when you're shopping around for a private lender. Another shameless plug here for Citizens for those of you new to the process. We have partnered with an organization called College Raptor. They are part of Citizens now, and they have a great college match on there if you're searching for colleges. Career Finder to just help the child figure out what career they might be into. Great scholarship search for even those already in college. Part of my daughter's job this summer was to continue to look for scholarships, because free money is free money is free money. Money we don't have to pay back. So I had her search for a number of scholarships this summer to try to get some more money to help pay for school. So that's an ongoing thing. It shouldn't just be senior year into freshman year of college. It should be an ongoing thing all the way through while they're there. And we talked about student lending solutions. So I brought up multi-year before and just wanted to share a little bit of slide about that. So it is really our differentiator here at Citizens. And as it says here, it really simplifies that college funding through graduation, really from orientation to graduation. Basically, you apply, and then if you're approved, we'll let you know if you're also approved for multi-year approval. What we also say is it's approved based on the first year amount. So in my case, and this is just a little pro tip, my daughter did very well with scholarships, so I didn't need to borrow really anything for the fall. But I wanted to be able to get approved for multi-year, so I applied for a larger amount that I actually needed, because it all is going to get reduced anyways. But that allowed me to be approved for a larger multi-year loan that I'll be able to use in the future when she has less scholarship money further down the road when she's in college. So it's at the first thing you apply for the loan, you select your rate, your term, we do a hard hit to your credit, just like every other loan you would do. And then we collect all the payroll information, all that type of stuff, approve the loan, hopefully approve the loan. And then after that, in subsequent years, that's where it ends. So basically, you just request additional funds in subsequent years. And then we don't do a hard hit to your credit. We don't collect any more information. If everything looks good, most people's credit stays the same year to year, you're able to request those additional funds going forward. So it's nothing that shows up in your credit report, as you know. So if you're unaware of the private loan process, a loan only starts accruing interest when it's dispersed to the school. So if I took out a $20,000 loan for my kid this year, $10,000 is going to be sent to the school in September. That's when interest is accrued. I also have $10,000 coming in January. No interest is accruing on that loan or anything subsequent to that until that loan actually disperses to the school. So that's something to be very important of. I know some people like to game the system and apply every semester. No, it's only when it's dispersed to the school. You always apply for what you need for the whole year. And then when it gets dispersed is when interest starts accruing. And then interest only payments, whatever you may have signed up for, goes through at that point.
Jeff, can I ask a question about the multi-year approval? What
Sure.
about how is the interest rate determined in the subsequent years?
Sure. So for all intents and purposes, the private loan process is a brand new loan. So really all it is. So, the only other loan that does some credit unions do an actual line of credit, where that line of credit sits on your credit report and you're drawing down from that. Ours something we keep internally. So it's an approval we keep inside at Citizens, but it's not showing up externally in any way, shape, or form. But it is a brand new loan every year. So you could choose a 5-year interest-only loan in year 1. You could choose a 10-year deferred loan in year 2. And those interest rates will vary based on the timing of the year. So interest rates, how they are now, might not be the same as next year. So it'll be a brand new loan with a brand new interest rate. But again, using that same overarching approved amount that you were approved for at the start.
Okay, so that's very interesting. So you basically, you have the comfort of knowing you'll be approved, but you also have the flexibility of each year if you need to make, different configuration of what the loan really is.
Absolutely. Yep.
Right. And I'll add that this is unique to Citizens. We are the only lender in the market that actually offers a multi-year loan where you can apply one time and only have one hard credit hit to get the funding through your entire academic degree. So you can make it very simple and ease that next sophomore year process of getting loans. You already have it. You just have to go tell us how much money you want. And junior year, you just have to go tell us how much money you want. You already have it secured for your student to get the funding.
So, sorry, one last question. I'm really curious, and I'm sure that parents probably have similar questions. Is there any max? Like, I mean, is there some maximum amount that, I mean, obviously I imagine the main max is I can't borrow more than what it's going to cost me for 4 years, but is there anything that's below that's a maximum?
Yeah, so when you apply, and that's kind of what Jeff was speaking to, that a pro tip is to apply for more than you need in this scenario because you can always take less. But when you apply, there's a algorithm behind the scenes that gives you an approval amount, so an overall approved amount. So in Jeff's example, if you applied for 20,000 and you're an incoming freshman, and I don't have the magic algorithm, but it might be 50,000, or sorry, I can't do math today. 120,000 that you're getting, or there is a cap amount that you are approved for. But it is allowing for you to finish your program. So if you have a 4-year program, a 2-year program, whatever the case might be, and then we add on to that. So the algorithm adds more than what we assume you would need for that remaining cost of your program.
And I'm sorry.
And with the caveat, credit approval, debt to income, all that, those factors do factor into how much we're able to lend as well, based on that. But usually it is based on that first year amount. And if you're credit approved, we'll approve you up to, again, that initial amount times 4, maybe 5, with a little kicker in every year, percentage wise over, because we know tuition increases annually.
So this is really just part of the loan. Like, I don't need to say, I want to be considered for multi-year approval.
Right. So when a student or parent applies, we will automatically run them through to see if they qualify for multi-year approval. And by far majority of our applicants that are approved for a loan do qualify for multi-year approval.
Yeah, there's 84% of our overall borrowers are approved for multi-year approval.
Okay, great. Sorry, those are all my questions.
Great.
Do you want to go to the refinance? We had a question up a little bit higher asking about, I think it's the very next slide.
Yeah. Do you want to take this, or I can take it, or either one?
I'll start and you add in.
Sure.
Okay, so to answer the question earlier, yes, refinancing is definitely something that Citizens participates in. On the slide here, you'll see that we're comparing private refinancing versus federal consolidation. There are some similarities, but there also can be very different. And I think the question was indicated that, I don't have it right in front of me, but that I think the individual had private and federal student loans. And we do allow for that. So you are able, if you would like, to combine your private and federal payments into one payment. And so that's a nice perk for potentially being able to have just a one-stop for you to pay back your student loans for your payments. The one thing with that is, with the federal loans, you will give up any federal benefits. So that's an FYI, that any federal benefits that were listed on that loan would be given up, because you're creating a new loan when you refinance. So you have now new terms, new interest rates, etc. A lot of people choose to refinance when rates are lower in the markets, so that they can drop their rates. But present day in the student loan, well, everywhere, but in student loans specifically, we've seen some higher rates lately. And so I think it's really important to educate all of you that refinancing is an option, because it could be a year from now, it could be 3 years from now, it could be 7 years from now that rates are looking better again. Just 4 years ago, we had really nice rates. and people refinancing at, 2-3%. And now you're getting loans at 8, 9, 10, maybe even higher, depending on what you're in having to take. So I think it's important to know you can refinance at any time after the degree is completed, and you can combine those federal loans in if you'd like. You don't have to. You can refinance just your private loans if you'd like. So that is an option. Interest is based on credit worthiness when you're refinancing. That's a big difference between the federal consolidation. Their interest rate and the federal side for consolidation is a weighted average of those loans. So very different on how interest is determined via federal consolidation versus private refinance. You can potentially lower the overall cost of the loans by refinancing, just by being able to get maybe a lower interest rate. Maybe you choose to take a shorter term. Those kinds of things can really lower that overall cost that you're paying for the loan. Trying to see what else I have on here.
So, Crystal, what about refinancing Parent Plus loans?
So that is an option. We do have sorry, I'm thinking of our parent loan, refinancing for parent loans. Parent Plus loans, we cannot refinance those. The federal,
Yep.
do you have that on here?
Yeah, we can refinance. Yeah, parent. We have, so like for citizens, we have education refinance loans and refi loans
There
for
it is.
parents.
Yes, for parents. Sorry, I was getting myself confused. Yeah, go ahead.
Yeah, no. So you are eligible if you have a plus loan to do that. Now, I know what a lot of families like to do is the plus loan is in their name and they would like to refinance it in their child's name. That's a big thing that folks like to do. So there is that double option. So basically, it's like a two-step process. So you are eligible to do that if you take your plus loan and refinance it, and then add your student as a co-signer on that, and then reverse it, where then that person, the student, is then the primary on a secondary consolidation. So you're basically refinancing twice. We tended to use those terms interchangeably, where refinancing really is on the private side, consolidation is on the federal side. And then you'll refinance again, and then hopefully again remove the cosigner release, which again, as citizens we have, and other lenders too, to then remove that cosigner, where the student is then now solely responsible for that plus loan, or what was originally a plus loan. That is definitely an option. So getting back to this, just one of the things I did want to say is that never pay for this. Refinancing is free for every lender. So there's plenty of places out there who try to charge you for this type of stuff. The scams everywhere. So just be careful if some students are trying to charge you to, if some companies trying to charge you to refinance or consolidate your loans. Consolidation, and I just like to say this, it's an ancient way of doing business. So this, for anybody who's been in student lending for years, like I have, the banks used to run student loans. So citizens used to run the federal loan program. Now everything's run through the federal government. So consolidation was, you could borrow from Citizens, you could borrow from Citibank, you could borrow from Bank of America. Consolidation was a great way to take all those different services and combine them into one loan. Now that we talked about earlier, there's only 4 servicers. Everything's run through the federal government. There's no need to consolidate anymore, because all your stuff is with one servicer anyways. So consolidation is just an old thing that's been around for a while, but a lot of folks still use it to potentially, people may do it. It's going to be more popular now, especially around plus loans, with people consolidating those to keep their existing benefits, with all the benefits that are going to be changing in the next several years, as part of the Big Beautiful Bill Act. Some folks may be trying to take their plus loans and put them in a different program, so they can keep the same benefits they had existing, as opposed to ones that are going to change going forward. But yeah, just getting back to refinancing, as Crystal said, it's free. You can look at, you can pick and choose which loans you do. If you have high interest rate loans you want to refinance, great. If you have lower ones in your portfolio, like I said, if you've gone to school recently, you may have had a little bit of mix of both. You don't have to refinance those and keep those separate. But for citizens, our minimum is $10,000, and then you'll see the maximum loan amounts based on the type of program that you're taking out, and then obviously a myriad of repayment options between 5 and 20 years to pay those loans back.
Got a good question in the chat here. So it looks like Chris just responded to it, but Is there an advantage for the student to take unsubsidized federal loan versus a private loan with a cosigner? What are your thoughts?
So that's a tricky one to answer. So we're always big proponents of taking loans in the federal program. Like I am, you know, the protections that are involved in that, as far as the repayment options, forgiveness options, anything if you want to go into forgiveness down the road, public service loan forgiveness, for as an example, then those federal loans, yes, would be the ones that offer the most, and they're offered with a with your financial, the student's financial aid offer. They have no, they don't have to, it's a signing a promissory note. They don't have to show any income or any credit to take out those loans. Now we know the maximum they can take out is, I said, around between 27 and $31,000. So a lot of times that barely pays for 1 year of school, let alone 4+ years of school. So, but it is a personal choice. So if you ended up getting a 3% interest rate on a private loan, and you know the student's not going to go in any sort of public service loan forgiveness, then maybe you want to take that lesser rate, because the rates of the federal loans right now are high. They were this year at 6.37. So, you know, if you can do better in the private market instead of 6%, maybe. But again, that's a personal choice. We usually recommend that folks take out those federal loans because it's, again, a great way to build credit for a student. It's a low borrowing amount, a low borrowing limit that the student hopefully should be able to pay back on their own on the undergraduate level. But again, it is personal choice when it comes to a family, depending on the rates they get in the private market.
And just remember that if you are taking those unsubsidized loans, that you can pay that interest as you go, as we spoke earlier. So that is a huge savings if you're able to put down just a little bit of money a month on that interest on those unsub loans that you're taking.
Looking for any other questions here. I see some of them. The chat's been busy, so thanks to Chris and Preston for answering some questions in here. Like, can the Citizens multi-year loan for any academic year be paid back early, and there's no penalties for prepayment? No, none whatsoever. So if you decide to pay back the loan early, that's there are no penalties for prepayment. Thank you for answering that, Preston. A lot around the grandfathering that Chris has been handling. Thank you. Let's see.
A lot of good questions.
Any that
If
we
you want to
missed,
go to the next
Preston?
slide, while you're looking, we can talk through the scholarship.
Yeah, absolutely.
We just wanted to share, sorry.
Sorry, can I just ask one more question about
Yeah.
refinancing before we move
Sure.
on?
Yeah.
So I had the question about having federal and private loans. I was just wondering, how exactly do I go about refinancing them? Do I go to a Citizens Bank in person, and then can you guys help me do that? Like, how does that work?
Either way, yeah. So you can visit a branch, you can go online, call on the phone. Either way, yep. And we, as I mentioned, the rate quote where there's no credit check or no hard credit pull on our in-school loans. Same goes for refinance. So you could actually go on the citizensbank.com /student and then or student loan, and then you could actually check out our refi rates there and not have a hard hit to your credit either. So you could plug in your loan information, and we'll be able to tell you and give you what your likely rate would be based on the loans you put in.
Okay, thank you.
You're welcome.
The question that just came in on private loans having a better interest rate, what is the benefit of taking a federal loan? I mean, the federal government has some benefits, like if you think of COVID, the last several years, students did not have to repay their loans because the federal government put a pause on repayment. That kind of thing would not necessarily happen for 4 or 5 years in the private market. There is many different repayment plans, which I think we're going to talk about those in the federal side. They're consolidating those. So the benefits aren't necessarily as big as they once were. Death and disability, now private world has a lot of that. So there is a lot more similarities now than maybe in the past, where financial aid administrators would really encourage you always to take the sub and unsub before you ever even considered a private loan. And I think that's changed just a little bit, especially in the light of, if I'm able to get a 4, 5, 6% interest rate on an unsub with no fees, on a private loan with no fees of any kind. On the unsub, there's a small fee, also a small origination fee. And their interest rates are set every year. So you always know each year it's annually set. So your interest rates will be different from your freshman year to your sophomore year to your junior year. So I mean, it is like Jeff said, kind of a personal preference. I can tell you that my own daughter, we declined the unsub and took out a private loan, just because we were able to secure a better interest rate and we're not borrowing. Thankfully, we didn't have to borrow too much. So we chose to go that route.
Yeah, and good point, Crystal. And when as you mentioned, federal loans as well, it's not just student loans. As you know, the PLUS loan is a federal loan, and that interest rate currently is 8.94, if I'm not mistaken. It was 9.04 last year, 8.92. No, it's just shy of 9%.
Just right,
So
right under 9, yeah.
yeah, so if you can get a better rate on the federal side, again, PLUS loan is there for a reason, for maybe those with limited credit or not great income to borrow. But if you have decent credit and you make good income, it's always worth exploring the private market, especially around the PLUS. The PLUS is easy to get. I'm not gonna lie, it's a very easy loan to get. But you can potentially do better on the private side as far as interest is concerned with either a student loan or a parent loan on the private loan side.
Well, I think I mean, you mentioned this once, but the Parent Plus loan origination fee is something you really want to pay attention to, especially for those of you that are having to borrow fairly significant amounts. On the Plus loans, there is a 4% origination fee that comes off the top. So that can sometimes be why a student or parent may choose to look into the private market, is because there's no origination fees on most private lenders. There's no origination fees. So you won't be paying a fee to borrow the loan. You will literally, if you take, $30,000, you get $30,000. There's no fee on top that comes out of that. So I think that's something just that sneaks in a lot. It's there, it's in all the fine print everywhere. Most school websites even have a little bit, sometimes mention it, but it's very common in a financial aid office to get phone calls on, wait, I borrowed $20,000. Why did I get 19,000? Or why did I get 18? Like whatever the math is there, but because that's a sneaky little fee that comes in.
All right, looks like a couple questions that came in here. Private loans have a better interest rate. What is the benefit of taking a federal? Is that the one we just answered?
Yeah. And I think
okay.
he had a second question.
Sub and sub loans typically have very competitive rates and borrower protections, but some borrowers, that's the answer. Never mind, sorry.
So if your kid already started the federal loan process, the loan can be declined. So if you do decide to go out and look and you find that you are able to get a better rate and you decide you don't want, you would always want to take the subsidized. There's no interest on it while they're in school. So that is if you are awarded subsidized loans, you would definitely want to take those no matter what. The unsubsidized is where your decision comes in, and it's a little, again, typically most people just will take the unsub, and that's by far most people. I think Preston would agree, working in an aid office, most people are going to take that unsub before they ever look at plus loans or private loans. But if you were to choose to decline a federal loan, you can do that. The easiest way to do it is before it disperses, before the school actually has the funds from the government. But there are some right to cancel periods that you have that you're able to decline it even after it's dispersed. If I remember correctly, it's a 14-day right to cancel. Preston, is that correct? Okay, there's a time period that you are allowed to still change your mind on it after it's dispersed, but it has to be early in that term. So if school is starting this week, a lot of schools' money is in the midst of being dispersed, so you could potentially still back out of something if you wanted to at this point. The federal and private rates are with you.
See a question here. Since I just graduated and start work in September, when should I apply for refinancing? Should I wait until I start my job? That depends. Sometimes we will take a proof of employment as your upcoming income when we're determining whether or not you'll be approved. But it's always, you could start the process now, again, with no obligation. You could look and see what the what your rate might be. And then once, a lot of times we'll require that paperwork, like whether it's a payroll stub or a proof of income, upcoming income, to do that. But yeah, no, you're more than welcome to um, apply now before you start your job in September. And we rates are held for a certain amount of time too, I believe 30 days. So, if applying now until we get the final documentation, it'll allow you to kind of hold that loan in limbo until we get everything taken in as far as documents. Let's see what else.
See, we
May
have
we know
one
the
here.
current
Yep. Never mind. You got it. You're on
here,
it.
yep. May we know the current interest rate of student loan only for a borrower with a cosigner? You certainly can try to apply. Again, we don't require a cosigner when applying for our student loans. So it is the borrower can certainly apply on their own, and they may be approved, and you may be able to see if there's a rate. They may be what's called conditionally denied, which means that we're not outright denying them, but we're denying them with the idea is we maybe don't have enough credit or enough income to take the loan out. But it's not anything adverse. It's just we don't see enough to lend to them solely. So that at that point they would need to bring in a cosigner, and then you'll be able to see the rate at that point. But if someone is okay enough to apply on their own and they're able to do it without a cosigner, absolutely, we'll present what that rate might be when they apply using that soft credit pull. But then you can bring in a cosigner at that point too if you'd like. We're always amenable to a borrower bringing in a cosigner to maybe get a better rate. But yes, you can apply if the student can get it on their own. Great, we're always open to that.
And on the screen, you see our scholarship. So we always like to share this. Citizens is really good about giving back to the communities. And we give away $2,500 a month, $2,500 a quarter, and a $15,000 annual scholarship. So we give away quite a bit of money. And it's a very, very, very short and sweet application. If you scan the QR code or go to our citizensbank.com/scholarship, undergrad students, graduate students, and parents can apply. So you can put your undergraduate's name in the hat, and a parent can put their name in the hat as well. Literally just a quick little form, and you are in for the drawings, and we roll it over each month so that we restart our scholarship every, what are we at? April 1st now, right? March 30th, April 1st. Yeah, March 30th is our cutoff. So if you put your name in now, you'll be in every monthly drawing until the end of next March. And then you could put your name in again, and then you could put your name in again the next March. So definitely take advantage of this. I can tell you that the students that have won are very happy they took 2 minutes to put their name in the hat.
Yes, indeed, and parents can apply as well as students. So both both sets can apply. And again, getting back to those in college, don't stop applying.
Yeah.
A lot of scholarships are good all the way through school, so keep applying while your students are in college.
Any other important slides that you want to make sure that you show and discuss?
No, let's see. We have a couple more questions here. Parent Plus versus student with a cosigner, rates are so similar. What's the better route? Again, that's going to come down to personal preference. So if you as the parent want to borrow solely on behalf of your child and have them have no obligation to the loan, then the plus would be your choice. And then again, just don't forget about the 4% origination fee off top that you have to factor in. So if you're borrowing 15,000, you need to borrow 15,500 to cover the origination fee. Student with a cosigner, again, that a lot of folks and me personally agree with that as well. That it's having the student have some skin in the game where the student has as the primary borrower. You potentially, I guess, would be the cosigner on that loan. You both are attached to that, but the student is the primary, and they're the one managing that debt. So again, it does come down to personal preference, whether you as the parent want to be the sole borrower with the student no obligation, or there's a shared agreement between and a shared cost between the student and the parent borrowing together for that education. Yeah, interest rates will vary. Yep. I don't see any other questions in the chat.
Sorry, I was talking on my mute there for a second. I apologize. As a parent, so Robert asked us to go back up and answer his question because I don't think we answered it. He says, as a parent to get a loan from Citizens, is there a max amount of existing loans that I can already have to still be eligible? I have 2 older children that I have $180,000 out already. And College Ave told him a max of 150,000 aggregate. So my colleagues will have to correct me if I am wrong here. I don't know that we know an exact number. I think it encompasses, do we have an exact number?
No, we do
More of a
have.
debt to income ratios and
Yeah, a lot of it's based
credit
on that. We have
scores.
student aggregates, meaning so what the student is eligible for. They have an aggregate limit in which they which we're looking to get rid of to just be costs minus aid. So basically that cost of attendance minus the aid that a financial aid office provides, that a school provides. But there, the only way I would say to know is to apply. Because we do obviously look, every lender has a different way of doing the scoring, and some are strictly FICO based, some use a custom scoring system. So there's you never know what a lender is going to do as far as what that maximum would be, but it does vary. So I wouldn't have a definitive answer for you on that, at least on the Citizen side.
We also had my kids are just about to start paying back their loans. Should they start paying more to unsubsidized loans first and then subsidized? I consolidated my loans when I was in college, but since my kids have both sub and unsub, I'm not sure what to do.
So what was it? Is that question in
So
here?
so the sub and unsub, once
Oh, here it
once
is, yeah.
they finish school, once they're done, and into the repayment realm, the sub and unsub are essentially the same at that point. The biggest the difference is while in school, subsidized is not accruing interest. So if you're making payments while they're in school, you would want to pay down the unsubsidized portion first. But if you're making payments after they're out, it's in my case, I remember when I had money to make extra payments, I would put it all towards the highest interest on in my sub and unsub book of loans. So
Yep.
I hope that makes sense.
Yeah, so when your student logs into their servicer website, you'll be able to see, let's say they took out 4 loans for 4 years of school, you'll be able to see each loan, whether it was subsidized or unsubsidized. And as Crystal said, it's irrelevant after they've left school, because the government will stop paying interest after that 6-month grace period on your subsidized loans. So the sub and the unsub will have the same interest rate because it's the same loan. It was just split out differently based on how the interest was paid, but it'll be the same interest. So let's say the loan is ending this year at 637. Both your subsidized and unsubsidized portion will be married together, and there will be one loan for $5,500 at 6.37, and you can start paying that loan back. But as Crystal said, you can look and see if you do have extra money, you can look and say, okay, this year was 637, last year was 653. I'm going to pay the 6.53 off faster because it's a higher interest rate. Or you can refinance or whatever you may want to do. But those are some options when you look at it. You'll be able to target the higher payment loans, higher interest rate loans with additional payments if you have them. So yeah, that's as you said, when you consolidated, all those loans came together into one loan. Whereas now you can target those individual ones with auto payment, and it's just a much easier process to pay loans back now. Let's see, any other ones we missed?
Yeah, a question came in about your undergrad loans going into repayment if you were in grad school, and the answer to that is if you're enrolled at least half time, that your undergrad loans will go into a in-school deferment, so you don't have to make payments on those unless you want to while you're in grad school.
Correct. Yep. Yeah, keep the questions coming. We're happy to answer as long as people have them.
I think somebody asked earlier, and I mean, maybe it was answered in the chat itself, but and somebody basically said, when should my student actually like, or when should they start to apply? And maybe, you know, also to help people understand how long the process takes.
For like under like a private student loan,
Yeah.
and you're saying,
Yeah.
yeah, really, you know, you can start shopping around. Usually try to say, you know, around May, June, you can start looking, exploring different lender options, start shopping around. Um, I will tell you, so like as Crystal mentioned earlier, the federal loans are set in May to start July 1. So that interest rate on your federal student loans and the those Parent Plus loans are fixed for the life of the loan, and they change annually every July 1st. As you can imagine, the private market's a little different. So rates change based on market fluctuation. So whether it's cost of funds go down, whether it's competitors, if a lender lowers their rate, other lenders might follow suit. So it's definitely, you know, it's a private market, so it's something to be cognizant of as rates change throughout the cycle. But you know, a lot of folks, colleges vary on when they give their bills. So some give them out July 1st to be due August 1st. Some are July 15th to August 15th. So a lot of times, you know, again, you may want to just prepare. One of the things we always like folks to be prepared for is make sure your credit is in order. Make sure that, you know, pull your credit report, go to annualcreditreport.com, pull down your credit report, make sure there's nothing funky on there. That you're not caught by surprise when you're actually doing this. So both in the student and the, you know, see what the student, it may not have any credit on the student side, but it's always a good idea for them to pull their credit as well. So just to be prepared, and I would say even before senior year, so junior year, as you're getting ready, you know, start to make sure that your credit house is in order if you're looking to borrow on the private side, and make sure that you want to maximize your FICO score, your debt to income, all those things to get the best possible rate on your loan when you end up applying. You know, when you either get the bill, your award letter, you know, figuring out what you're actually going to owe is during that kind of spring, summer. When you start getting the award letter from the financial aid office, determining what the bill might be and what you're finally going to have to owe. And again, what you're either going to borrow or what you're going to cash flow currently through a payment plan. Use your 529 savings if you have any. Those type, again, coming up with a financing plan for college and being upfront about it. I tell this to all the families that I speak with: bring your students involved. For parents on the call, get your students involved in the conversation. This is their education. They should be the ones helping pay for it or know what it costs. You know, I have my daughter do stuff all the time. I was fortunate; my daughter just became an RA. I was very happy. We got a last minute call; she got pulled off the wait list to be an RA. That's a huge savings for us. So the loan that I borrowed, I said, I'm not calling the financial aid office. You do it. Please call the financial aid office and reduce the loan because we don't need that much to borrow because of the discount we're getting off room and board. So those types of things empower them to be involved in the financial discussion and the finances with paying for college. I'll get off my soapbox, but that's always what I like to share.
There was
Great
a question in the chat that says, do you have loans with no payments during school? And we do. We have loans that can be totally deferred. And we also have interest only and immediate repayment.
Thank you, Ann.
Yep, and I think we're caught up in the chat here. So
Okay, anybody else have any other questions? I was going to say, Jeff, when you were telling your story, it always hits home, right? When you have to, when you're a parent too, and you're going through the process, and it doesn't matter all these years you've worked, you know, in the field, but when you're going through it yourself, like, oh, okay, so this is exactly how everybody feels.
Yeah, it's very, yeah, I've been doing this for over 20 years in higher education, various roles, and to actually, yeah, you know, I've answered questions from families. I do the talks in my hometown to the high school nights. I do all those, and at soccer games and basketball games, I'm always talking to families. I was talking to someone, I was on vacation a few weeks ago, and someone called out of the blue and had never borrowed before and had all these questions. So I'm always happy to answer these types of questions, you know, personally in my personal life. And yeah, to actually go through it, Debbie, you're right. And trying to practice what I preach and get my kids involved. And, you know, they're probably sick of me hearing of it because I preach it all the time. But, you know, if I'm parting them and they're telling their friends, you know, get involved, be cognizant of what college costs. They're very aware of it. You know, we try to get through and not pay as, you know, a college's job is to get you to say yes to the lead amounts of money they're going to give you. So, you know, the idea is you got to treat it like a very expensive business transaction that it is. It's really the second largest expense that most families will have next to their home. So, you
Honestly,
know,
depending on how many kids you have, it could be more than your home.
yeah, exactly. You're right. And so to treat it really like not an emotional decision, but a business one in a lot of ways. And a lot of colleges want you to make an emotional decision. That's their job. They want your kid to fall in love with the place and all the bells and whistles. And don't worry, honey, we'll make it work. Is I hear that a lot. And it's that's not the way to have that conversation. And you know, we hear all the schools now where kids are moving in. They're like, "What do you mean I owe whatever?" Or, "I thought this was all set." And it's like, no, to get your key to move in, you owe this amount of money. So you have to have that plan before you go in. So really, you know, having that plan set in place and involving your kids in that discussion, I always recommend that because it's just it's you know, they understand the reality of the situation. I think it's gotten better. I do think that more families are having this discussion about the cost of college and how to best tackle it with you know borrowing, savings, everything else.
Okay, and I'll give one more shout out. If there's any questions, feel free again to unmute yourself, or if you want to put it in the chat. And as we're waiting, I will just, you know, thank everybody here from Citizens. What a crew with all these, all this expertise. So helpful. And you know, I love that people came with good questions. It's helpful. I always find personally it's helpful to kind of hear somebody else's question because maybe I hadn't thought about that, or maybe I might be in that situation in the future. And so, you know, it's nice to kind of hear what other people are going through because, you know, even though you might not have that particular situation right now, just learning about the process is so valuable for you as a parent and for your student, as Jeff was giving the example. I guess there is one quick question. I don't know if anybody wants to ask. Is this about how is enrollment status communicated?
I'll take this. So on the federal loan side, the school will report to the National Student Loan Clearinghouse, and your undergraduate letters will get notice that you're moving on to a graduate program, and that will keep your loans in deferment.
Great. And so what if, you know, people continue to have questions, what's the best way for them to reach out to Citizens to continue to get their questions answered?
Yeah, so I guess, yeah, we didn't think about putting contact information, but if you, obviously, if you know, we're representatives of Citizens. We all work in our college and university team, as well as our college bound citizens team. That's what I work in there as well. So if you do have any questions, you obviously can feel free to email collegeboundcitizens@citizensbank.com. We're happy to answer questions there. And then obviously any, you know, citizensbank.com/student loans. If you want to, you know, explore more of our opportunities there, visit College Raptor if you have any questions on and do some of the exploring on the college side. But yeah, any of that email that is provided, I can put that in the chat. We're happy to answer questions as well.
Okay, great. And so just so everybody knows, this was recorded. We send out an a email tomorrow with a link to the recording. We're actually also going to send these slides if you want to look through them again, and there'll be more contact information in that email as well for our, if you want to follow up and reach out to Citizens. Well, thank you, everyone. Thank you so much. And Crystal, Jeff, Preston, and I apologize. I know somebody was in the chat also answering questions. So thank you. Hopefully people got their questions answered tonight. And we always wish people the best of luck and continue to feel free to either reach out to Road to College, go to the Paying for College 101 Facebook group, or reach out to Citizens. A lot of people here want to help and make sure you get your questions answered.
Absolutely. Thanks for having us. Appreciate it. Good luck, everyone.
Thank you.
Thank
Good
you.
night.
Bye-bye.